Hello traders, it's Sunday evening, October 24th, and I'm going to be doing my research for the week, so I thought I would share. I've got some really exciting news for you. You know how well 1OP works for the S&P 500. I've been able to optimize it for individual stocks. This is a true game changer, and I'm going to show you buy and sell signals that are based on 1OP and our relative strength, relative weakness indicator. You're going to get to see how accurate these are. Before I do that, Thursday morning before the open, I released a video. NVIDIA was my pick of the day. You can see this is a 15-minute chart. There was the open for NVIDIA. Nice long green candle, doji, follow through. In any event, that's where it opened. That's where it is right now. You can see that NVIDIA's had a nice rally, and I liked selling an out of the money bullish put spread on it. You've got this nice upward sloping trend line right in here. Let's put the major moving averages up. You can see where they come into play. And I like anything around this $200 strike price because you've got the 100-day moving average right in between. Excuse me. So I like this support level right here with the 100-day moving average. If you wanted to be more aggressive and go to the 215, you can. Earnings season's coming up on the 18th of November, so you want to make sure that you sell options that expire before that. I think that's a little bit too aggressive for me. I'd prefer to continue to keep my distance. I still don't trust this market. We covered 200 S&P points in little more than a week from here to here. Look what the volume did. Very, very light volume. So not the type of volume that we'd like to see on a big rally like this. Lots of excitement. Earnings announcements are starting to come out. We've seen some pretty negative reactions too. Now, Netflix sold off initially. It rallied nicely. Tesla sold off initially. It rallied nicely. A couple of big tech names. The good news is already priced into these stocks, so it's going to be a little bit difficult for them to advance. I do believe that tech will fare pretty well relative to other stocks because they won't have the huge payrolls. We know that hourly wages are going up. That's going to bite into profit margins. They also don't have supply disruptions, not to the extent that a lot of other companies do. So those are a couple of things that I think benefit tech stocks. Also, they don't have higher raw material costs because they are technology companies. So I think that they are going to fare pretty well. But those valuations are stretched. We haven't seen forward PEs at this level since the tech bubble of 2000. So yes, money continues to flow into the market because interest rates are so low and the yields don't keep up with inflation, so you're generating negative real returns. That keeps mutual fund managers invested in the market. I believe that the reason we had these gaps higher on very light volume is that there aren't any sellers. In here, asset managers that felt like they needed to pick up protection were shorting the futures. As soon as they started to buy in their futures, they still held on to their stock positions. There was very little stock to offer. So buyers, even on light volume, were able to drive the market up. So asset managers who have a lot of money to move and a lot of stock positions to move, they're not going to be in and out. They would prefer to hedge with the futures, take the hedge off when they need to, keep their stock positions on because they can't move that much size in and out of these names. It's much easier for them to hedge using the futures. And that, at least to me, explains why you're getting these gaps up on light volume and why you are retracing 200 S&P points so quickly. So in any event, let's move on. I like the market. We had the downward sloping trend line here, broken to the upside. We're above the 50-day moving average. We are flirting with the all-time high. So I think that until all the mega cap tech companies announce, the bid will be fairly strong. So we're going to stay on the bullish side of the equation. And now I'm going to show you how well these buy signals are coming through. So this is only available on a 5-minute basis. Let me repeat that. These arrows are only available on a 5-minute basis, M5 chart. The reason for that is I'm still building the database. I don't know if I'll be able to apply it to longer time frames. For right now, I didn't want to sit on it because it's working so well. I wanted to release it as soon as I possibly could. So please don't ask me when I'm going to have it available for 15-minute and 30-minute. Can I use it for longer term swing trades? I don't know. All I know is that I've got it optimized for a 5-minute chart. So for those of you who are day traders and very short-term swing traders, watch this. I think you're going to like it. So I'm going to just click the buy and sell arrows, and you'll see a red arrow means sell, and a green arrow means buy. So I'm going to go back, and on the S&P 500, you can't use this because it takes into consideration relative strength. Well, when you're measuring the S&P 500 against itself, you're always going to get a value of 1. Anything divided by itself is 1. So it is the basis for everything. But I'm going to go through. I'm going to go on pop, bull. That's in our swing trading search. All I'm going to do is I'm not cherry picking. I am just going to go through the list, and I'll do that for another list, and we'll take a look at how well it performed. CLF. Yes, I will have a pick at the end of the video. There's your gap up from earnings buy. Look at that gain. That was beautiful. Now you can see blue arrows. We're short here, red arrow. Blue arrow means we stopped out. This is an area that I think I can improve on. I haven't tested a bunch of different stop methods. I've just gone with some pretty simple types of stops. So you can see you're short, you're out, you're short, you're out, you're short, you're out, you're short, you're out. So if you'd have taken that short and used some trend lines like this, you can see you would have stuck with the position, you would have made some money, and you wouldn't have been chopped out. What you need to avoid is these compressions where the stock really is not doing a lot. In fact, let's just quickly look at the price action on the S&P on Friday. It didn't do much. Once we had that initial drop here, it kind of settled in the last 3.5 hours of trading, and it just went sideways. So sideways, we get a little drop, nice rebound. Most of the day, this is about an hour of the day, that's when we had some decent trading. The rest of the day was mixed candles, not a lot really going on. So keep that in mind as we're watching all these different charts. So I'm going to go back to CLF, and we'll take a look at how things shaped up. Nice buy, exit, buy. There we actually go short. So again, that stop right there, if you were able to weather that storm, you had a nice long in there. You still made money on it. So here you're short, you're stopped out. Here you're long, you're stopped out. Here you're short, you're stopped out. Stock's not doing anything in here. You've got a lot of mixed candles. So I'm going to show you something else that we can do visually to aid our analysis. And this is something you can also do when you're in a position. Beautiful entry there, nice exit. Beautiful entry there. Now we're short. So again, if I can get rid of that, you're in here, you're out there. Beautiful profit. This is symbol BX. Nice little short in here, out right in here. Or if you hung on till that buy signal, you've got a scratch. Nice little long in here. Got a little short, probably a scratch in there. Beautiful long into the close. There's a short and out right there too. You can see very tight stop in there, but BX, very nice. ORCL, beautiful entry. There's your out. Got a little short, lost money there. This is a beautiful entry for a long. Look at that. That is gorgeous. Got a little short right there, made money. In general, when you have a stock that's super, super strong like this, just trade the long side. You don't have to trade the short side. So when you see a sell come in here like this, you don't have to take that. Just wait for another buy to set up. That's how I would trade it. COP, mixed candles all over the place. Red, green, up, down, herky, jerky. This is exactly the type of stock that you do not want to trade with this system, and you do not want to trade it with any system because you're not going to be able to catch these moves. As soon as you get the move and the follow through, it's reversing. So COP really didn't do a whole lot of anything. We'll go to the next one, JPM. There you can see, beautiful long, take profits, nice short, exit, nice long, exit, nice, lost a little bit of money right on the close, but look at how much money you made on this. Entry, exit, short, exit, entry, short, made money on that. Beautiful. So I'm going to show you a trick that's going to help you with this when you use it for trading. ATVI. Long and out, short and out. So all of this is gobbledygook on the open. Nothing much going. But here you get your breakout. So again, you need to use technical analysis. Use your technical breakouts and breakdowns, trend lines, horizontal support and resistance. You got a nice rally early in the day, downward sloping trend line. This is a classic bullish flag formation. Oh, green arrow. Yeah, I'll take that. Now this is where the system exited. Still made decent money on that short also. Chop, 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 chop. Nothing going on here, but look at it grab that beautiful down move right in there. Upward sloping trend line, breach to the downside. Okay, I've got something to trade off of. I can also use that opening price there. Draw my upward sloping trend line. Okay, this is good. I've got something that I can lean on. That's a nice technical breakdown. So I would take that right there. Let's go through and take a look at this and use a little bit different perspective. Let's use a Heikin-Ashi chart and you'll be able to see it a little bit more clearly. Beautiful entry on the long. Now we're short. Stay with the position until here. Now you've got some green candles stacking. That's nice. That's nice. Should be able to stay with that position. You've got a short right here. You're stopped out immediately. And then this is just chopped the rest of the way. But you can see how I'm not clicking at AUPH because it had news at the close on Friday. There you go, Heikin-Ashi. Got these flat bottom green candles, beautiful. Got your sell right in there. Got your long right in there. This is nice in here, and this is choppy, tiny little dojis. You don't want to be messing around with that. ORCL, yes, awesome. Didn't catch that short in here though, but that's okay. Get in very late on it and stop right out. But look at that long that we caught right there. Caught that whole dang thing. There's a nice little short. Probably make a little bit of money on it, but not much. COP, we've already determined. There's nothing. We'll take a look at what the chart looks like with HA. All over the place. Up and down, up and down. There's nothing decent in there. I think even on something like this, probably a scratch, lose a little bit of money there, make a scratch there, maybe make a little bit in here. Overall, looks to me that's a nice little short. You know, you're going to be somewhere probably in the negative territory on a stock like this, only because you're in and out, but not overall too bad. Nice. Look at that. Beautiful. Beautiful. Red arrow. Beautiful. Everything's good in here. A little bit of a short here. So very, very nice ATVI. We'll finish with that. You're long in here. You're short in here. You're short here. Beautiful. Out. I'm going to take a look at one other list, and that's heavy buying. I can't knock through this whole list here, so I'm just going to go, I don't know, I'm going to pick a point and we'll go down to maybe in here. DIA, which is interesting because that's the diamonds, that's the Dow Jones. Tesla, very nice, beautiful, beautiful. Chop, 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 avoid that. A little bit of a pullback, get you long into the close here. I hope you're getting excited about this. This is a game changer. You get the market right. You wait for that market tailwind. You wait for 1OP to line up on the S&P 500, and then you're looking for stocks that are strong, heavy buying, and then paint by numbers. Wait for that green arrow, and if you need help with the exit, exit on the blue arrow, or you can exit when you see a red sell signal. You can do either one. You can use your own stops, manage the trade as you see fit. So you've got a little bit of a short, but a lot of chop in here. You shouldn't be trading this. I wouldn't do anything with that. Maybe on a breakdown below this horizontal support, but this stock is showing you it wants to go higher. So I'm not going to be very interested in shorting. So, and also at the time you had the market finding support too. So let's do a quick overlay of the S&P. Look, you've got your market finding support and bouncing violently in here at the same time you get that sell signal. You want to be on the long side. Let's take that SPY overlay off. And now you can see you're long in here, out in here. Look at those gains. Absolutely beautiful. UNH. I am not cherry picking, folks. I'm going through our heavy buying list. I went through our pop bull list. This is how it's performing. Here you can see it was already on a buy signal from last Thursday. Beautiful run. Nothing going here. Nice little run there. Now you're compressing. Do not trade that garbage. ETSY, beautiful long out there. Short there. Probably a scratch. A little bit of a long in here. Now you're doing nothing in here because it's still overhead resistance. There's nothing to trade here. You've got support here, resistance here. You don't want to be taking these signals. So not too bad there. BX we've already taken a look at. Oracle, TGT, that would be a new one. So TGT, again, you're long, you're short, you're in, you're out. This is just chop back and forth. But here you get this nice downward sloping trend line. You've got your bullish flag formation, downward sloping trend line. Okay, there's a nice entry point. Take your profits up here. Nice, beefy profits. Beautiful little short there later in the day. Dell, take a look at that. In here, out there, not much going there. You really haven't broken down through support, so I wouldn't be taking that short right in there. Don't know that that long right in here, you're kind of through this downward sloping trend line on here. Maybe you take it. You could stop out for a small loss. Dell really didn't do a whole lot on Friday. Walmart never does much. You can see that was a decent long. You're out there. You got a little bit of a short here. Got a nice little long in here, a little short there. Nothing to write home about. Home Depot, we'll take a look at that. Beautiful long in here. Out here and short. Again, compression, stay away. Yeah, a little bit of a short here. Nothing too fantastic though. And once I see this, I don't know that I'll take that. Maybe on a breakdown here if I had the market rolling over, but I'm probably not going to trade that because I'm looking for a long only entry on Home Depot because it's been so strong. There's Nike, not a lot going on with it. And let's go right down and let's take a look at OXY, Occidental Petroleum, short, out, beautiful long in there. Not a lot in there. Catches a little move on the close. And finally, we're going to go down to, we've got a couple more to look at here. Don't know that stock. GLD. GLD had a nice long in here. There's a gorgeous short. Stops you out, and that is a beautiful short. That's a beautiful long. That's a beautiful short. You can see it's catching these moves and it's catching them early. Nice long in there. Out here, you'd lose money on that stop. Long there. That's a nice long. If you looked at this in aggregate on KR, which KR is not a big mover either, you can see. You bring up a daily chart and you look at this and you go, no, I don't think so. You want to have stocks that are moving. That is the key. That's the key to any kind of day trading. So you want to make sure whether it's breaking through a 100-day moving average, it's had earnings announcements, it's making a 52-week high, it's got exceptionally high volume. This is not a stock that you would want to be trading until it can break through some of these technical resistance points and show you that it's starting to gain some momentum, which it might be here. It's got 3 green candles stacked in a row. Let's take a look at the daily chart, but you can see it's kind of chopping around. This is a normal candlestick chart. I'm going to go into DIA, go into the 5-minute. Yes, you can look at indices. You can see here, there's a beautiful short up there, covers here, short here, really nice. Long in here, out here, short. That's a pretty wide stop right in there. So not sure what happened there, but that downward sloping trend line is breached. You should be out here. There you get long and you're stopped right out. So again, towards the end of the day, not a lot going on. But when the market was moving, you had a nice short in there, nice long in there, caught that move. And that was the meat of the move Friday. As I'd mentioned, we had about an hour where we did get a nice drop and an instant rebound, and the rest of the day we really just chopped around. So when you have a market that is directional and you've got a bullish trend day or a bearish trend day, oh my gosh, that's when you want to have your HA charts up, Heiken Ashi, and use those transitions from green to red as your guide. So here you had a nice buy from the prior day. You can see, nice short in there, nice buy in there, out there. You're making money on these. Pete, should I buy stocks when I see a green arrow on the close the previous day because it's telling me to buy? I don't know. I don't know yet on this system, okay? I know it works great for day trading. Anytime you take overnight risk, anything can happen. Anything can happen. You could have a 50-point S&P down move. And if you go in and you buy this stock on the notion that, hey, it's got a green arrow and you're not paying attention to what the market's doing, the market opens 50 S&P points lower. Guess what this is going to do the next day? It's going to tank. So you have to take into account your confidence in what the market's going to be doing overnight before you would take a buy signal like this. If you told me that, hey, there was a buy signal and the stock was finishing pretty strong and breaking through D1 technical resistance the previous day, then yes, I may want to take something like that. Let's put up well, eBay I think has been pretty strong, for instance. So if we take a look at eBay, there's a big compression right here. Long green candle on the open, breaking through horizontal resistance, closing on its high of the day. So in this particular instance, if I felt the market was go gangbuster going to rally like mad, would I take a long on this one and hold it over the weekend or overnight? Which, by the way, look at the signals in here. Got a long there that you made money on, and actually back in here it's telling you to be long the previous day. Got a little short, stop out, long, make money, short, make money, long, beautiful, short and out, tiny loss, long and out. These arrows are fantastic. I'm excited to get it in your hands. If I sound tired, it's because I've been working all weekend trying to get this new version released so that you can use it Monday. It works great. And if you were looking at the market and you were considering taking an overnight long position on a stock that was breaking through technical resistance and that had relative strength, downward sloping trend line, breach to the upside, that is where you want to get aggressive. Long green candle, bullish engulfing candle, market closing on its high. Yes, the probability that you're going to open higher the next day is very, very good. So a stock that's been super strong, yes, this is where you'd want to swing and hold it overnight. Follow through, follow through. Yeah, this is all good. We're heading into earnings season. What about now? Now we're on that all-time high. I'd really have to see a long green candle through that all-time high and closing above that with conviction and hopefully some kind of volume. Because every time we've had one of these pullbacks, now this one has been longer in duration and it's been deeper in terms of magnitude, this is a sign that the selling pressure is heavier than we've seen all year. But the pattern that we typically see is once you get the drop, once you get the rebound, you get back to the high, and then what happens? Nothing, 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 nothing. Tiny little bodied candles. So even if we poke through, I think we're going to see tiny little bodied candles while we hear from the mega cap tech companies. We have the FOMC coming up November 2nd. They are talking about tapering and ending it by the middle of next year. If that's their timetable, they're going to have to start pretty soon. How will the market react to that? We don't know. So I think that earnings are coming out right now. Stocks are priced for perfection. We're at the all-time high. We've got valuations at levels we haven't seen since the year 2000 tech bubble. I think you got to be careful in here. So I would use this on a day trading basis. If we get a market pullback, maybe to the 50-day, and then things start to stabilize here, then I think you can get a little bit more aggressive with your longs again because you'll be rallying from a lower level, and your probability of having a nice, strong market close and follow through the next day will be better from this level than it would be from this level. So let's take a look. I've got a stock that I like, and I've got a few of them that I like, and I can't recall which search I found it on, so I'm just going to put it up for you. I like this formation here. This is IMAX. Now we'll hover over this. We've got earnings coming up on 10/28, so you've only got a few days to trade this stock, and you've got to be out before earnings. I am not advocating that you hold this stock over earnings. We don't do that. We trade before the number, we trade after the number, but we do not hold over the number. Long flagpole, beautiful downward sloping trend line. This is a bullish flag formation. I think you're going to see IMAX continue to move higher. 200-day moving average there, 100 there. Never even got close before it found support. This stock wants to go, and it's got some pretty nice orderly patterns to it. You can't really sell an out of the money bullish put spread on it because you don't have any expirations before that earnings announcement. Could you buy deep in the money calls? Yes, you could. Make sure you're out before that announcement. And you could also just buy the stock. So I like this. I think it sets up well. We've got the S&P 500 futures down 11 points. So when you come in Monday morning, Pete told me to buy IMAX. I love IMAX. The futures are down 30 points, but I don't care because I'm supposed to buy IMAX. Folks, watch the market, please. If the market's falling apart, you do not go in buying. When the market is falling apart, you want to watch IMAX and you want to see how it is behaving. Yeah, might as well take a look and see how those signals did. Had a nice short in there. Take profits right there. Short and out. Barely lost any money there. And then look at that gain. That's beautiful. Short, out, lost a little bit of money there. Beautiful long into the close, heavy volume. So I like all that. But when you are watching a stock Monday morning, and let's say that this is the open of the market, and you see that the stock opened higher and it's been able to hold that opening gap higher when the market is ka-chunk, 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 heading lower. You do not need to buy on the way down. You'll have plenty of opportunities once the market finds support and you can start to see, oh, okay, here's a nice rebound in the market. Now we have a double bottom higher low. All right, this is probably where I want to start considering it. If you want to play it even safer and have a higher probability trade. In this case, we don't have a nice downward sloping trend line that was violated to the upside, but we do have a horizontal resistance point that comes into play right here. So wait for that technical breakout. Now we know the market has a nice bid to it and that it should be stable, and the stock is starting to break out and you're starting to see some big volume spikes in it. Yes, this is where you want to buy. That's how you want to trade IMAX. Let the market find support. I think that stock is going to do pretty well into earnings. I'm only looking to trade it on Monday. I don't care what it does Tuesday or Wednesday. If it's coming up on my searches and it maintains its relative strength, I'll stick with the position. And there was another question that was asked, how do I know when to stop myself out of a position? How do I know when to enter the position? It's all based on relative strength. If I'm looking at IMAX going, hey, you know what? The market came back pretty far off of its high right there. That looks pretty bearish. And look at this stock. It's hanging in there right near its high of the day. Maybe I should try and front run the market a little bit and expect that it's going to find support in here. And maybe I can buy some here just because it's so strong. Yes, you could do that. But if you're doing that, that means you're willing to take some heat because the market has not found support yet and you're scaling into a position. You're not blam putting the whole position of IMAX on. Dip your toe in the water if that's what you want to do. Here, I think the market's going to rebound. This stock has relative strength. I'll put my toe in the water here. I'll give it some room. Now the market comes in and you're thinking, oh, this doesn't look so good, so I'm not going to be adding. But now that the market finds support, you still like the stock, you can add in here. You can add in here. But again, the daily chart is what gives you staying power because you've seen the strength that the stock has had. It's through all the major moving averages. You have a bullish flag formation on a daily basis. The stock has been strong relative to the market. Are you seeing the check boxes that have to be marked? I have them marked on a daily basis. I have them marked on a 5-minute basis. I'm simply waiting for that market tailwind. Then I go into the position. And if along the way I see the market rallying and the stock is drifting down, get the heck out. It's lost its relative strength. That's how you have to manage your positions, and that's how you would stop them out. So anyway, I like IMAX. I think the market's going to try and grind higher this week. I think the headwinds are going to be blowing like crazy. Are the earnings going to be good enough? Big expectations priced in right now. People going to be worried about the FOMC meeting that's coming up a week from this Wednesday? Perhaps. So a gradual grind higher, perhaps a new high, but not an explosive move. Lots of tight ranges intraday. Use this on a 5-minute basis, and I think that your probability of success will be very, very high. Thank you. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.